So there's 4 things I look for on the 15-minute chart. The first is market structure. So if I label this is market structure. The second is I look for my dealing range. The third thing is I look for my premium and discount. And the fourth thing I'm looking for is my fair value gap. So I've already done kind of step 4 because I've already derived the key level, which came from a fair value gap. So that's a tick. So the next thing after we've done that, is we want to look for basic highs and lows. We want to look for basic market structure. So the way we do that is we see a market high, we see a market low, we see a market high, and now we see a break over here. So this is our structural break, market structure shift right here. And now from here we see another low, another high, another low, and then we obviously had our break. So we had one break down here, right? And then we had one break all the way up here. So this was what confirmed our market structure. Now coming into the 8th of December, we had another market structure shift and a very choppy week. So I personally want to see a proper correction. So I'm not interested in marking up internal lows, like internal highs and lows. So I don't want to start doing this. This to me doesn't speak to me. This becomes very messy. So I want to avoid all this price action, this really choppy week we had last week. From the 1st to the 4th or 5th was a really difficult trade, a really difficult trading week for me. Now this for me was Friday's high, and then we've had, in my opinion, a decent sell-off. And I'm going to be going over this sell-off specifically. Now the reason this is important is this is now my structural high, which is at 6,900 or 69.0405. So our dealing range is this entire region from this low all the way up to this high. So this is the dealing range. And how we use the dealing range is by projecting the fib. This is also step 3, from the low to the high. So what we have here is 2 specific zones, right? We have the 50% area. Anything above that becomes a premium. Anything below that becomes a discount. So these are the 2 critical regions that we want to focus on in our trading. And we have our fair value gap, which actually derives our key level. And this is where the entry model becomes super mechanical. So you want to have these 4 things ticked off. Have you got your structure, highs and lows? Yes. What's your dealing range? The most recent low, the most recent high. Are you in premium or discount? Well, today we were in premium, therefore we're looking to short. And have you got a 15-minute fair value gap? Have you got a key level in the market that you can actually trade from? Well, yes, yes we do, 68.80, 68.90. So these are the 4 steps that I follow every single day. Once you have these marked out on your charts, it doesn't take you more than about 5 minutes to do. Now from here, when we